If you're scared right now, you have every right to be, because today's price action is anything but normal. The altcoin market and the entire crypto market in general has had its worst liquidation event ever. Worse than Luna, worse than FTX, which was a $1.6 billion liquidation event. This is now a $2.2 billion liquidation event with almost $2 billion of longs wiped off the market. There are a variety of reasons for why this has happened. We're going to speak about that today. I also want to talk about what I'm doing, because I've made some of the biggest portfolio moves that I've made in the past year this morning, which I want to run you through, and my thought process behind those moves. And I also want to talk a little bit about the future, what I think we can expect, especially from the next few weeks and months in crypto, and how you can actually use today to your advantage to set yourself up for that. So without further ado, let's dive into a quick recap of what is happening, because like myself, if you've woken up this morning and you've checked your phone, you're probably shocked. I remember waking up and all I saw was like a bunch of altcoins down 20, 30%. And like, although 5 to 10% dips across majors is pretty normal, it's pretty rare you see 25 to 30% dips in a single day. It's honestly something that only happens once every year or so. And this hasn't happened to this extent in terms of the amount of leverage and liquidations wiped out of the market in crypto history. Now, there is a little bit of a caveat though. The reason why it's the worst liquidation event in terms of the total dollar amount is because the nominal values are higher because the market's higher. So obviously, if you have a bigger market cap, when price drops, you're going to have a larger total dollar amount liquidated. The percentages technically were bigger in 2020 and 2022, but this technically is the biggest crash in terms of nominal value. And we've also seen $750 billion of market cap wiped off the crypto market in the last 60 hours, which these are big figures. We're talking about big numbers here. So I see a lot of people panicking. I see a lot of people worrying, and I'm not going to come here like a lot of other YouTubers and say like, oh, you have absolutely no reason to panic. It's fine. Just, buy the dip. It'll all be okay. These aren't things that a lot of people, especially if you've just gotten into the market in the last year, that you're used to seeing. These are rare events. But what I will do today is I'll give you a game plan, and I'll go through very logically the steps that you can take to actually make good use of this dip, and my thought process around whether things can get worse and how to kind of navigate it. But I think if you are worried, you have every right to be, because I know also a lot of you weren't necessarily there for Luna, or maybe you didn't have that much exposure then, or FTX, and a lot of people that have just joined the market recently, this is like a welcome to crypto moment. This is something that I think experienced players are very used to, but it's not just a market full of experienced players. The crypto cycles hinge on new people coming into the market, and there were a lot of people onboarded through the trenches, through Pump Fund, through Memecoins, even through the Trump meme coin a couple of weeks ago, who are now getting their first taste for what a real liquidation event in crypto feels like. So let's go through actually what happened overnight. We saw Bitcoin wick down to 91K. It has bounced now. I'm recording this pre-US Open. That's also when it will be uploaded. The market is still a little bit shaky, and it's going to be very volatile over the next couple of days, especially as the market continues to digest some of the tariff comments and news that we're going to get from the Trump camp. Ethereum probably had one of the worst wicks to the downside to 2100. It's now stabilized around 2500, but that was a really nasty wick, and if you're awake for that wick, I woke up just as we were starting to recover. It was honestly shocking to open CoinGecko and TradingView and see Ethereum at 2200. The total 3 crypto market cap also had a major wick into the weekly support band. This is the first time we've had a full retest. Funnily enough, looking at the total 3 chart from a high time frame perspective, it doesn't actually look bad. What this does do though is it definitely slows things down. So any sort of left-leaning cycle theory of an accelerated peak, which was definitely on the cards a few weeks ago, I think you can wipe that out of your thinking now. And I think any major peak definitely has to happen later in the year, or at least slightly later down the track. And maybe not in February like some people were expecting, just because when you have a wipeout of this magnitude, it does some damage in terms of the time that it takes to recover, which could in some ways be viewed as a good thing, because it actually buys you some time to properly position, and it also gives some narratives some breathing room. I'll talk about in a second why it's actually been good for some sectors to have this flush out. But overall, it does lower, obviously, the chances of a big altcoin run in the immediate future and does delay things. And I think Total 3 needs to just consolidate a little bit here and calm down after what was a very, very violent wick to the downside. And I think the market just needs a little bit of time to breathe after that. Now, there was one chart which I saw today, which honestly blew my mind, the way it was pieced together, and it was this, which you're seeing in front of you, the altcoin performance versus Bitcoin measured from Bitcoin cycle bottoms. You have the 2017 cycle, the 2021 cycle, and the 2025 cycle. The 2025 cycle, as you can see, versus Bitcoin, has pretty much just been sideways, if not down, for altcoins versus Bitcoin. Whereas even though every cycle begins like that, 2017, 2021, eventually you have these inflection points which often happen around this period here at the end of the halving year, which result in massive expansion for altcoins. But we haven't seen massive expansion for altcoins at this point. We saw it being front run a little bit, but this was ultimately a fake out in November, December. And since then, we've only seen downside. So the reason why this dip is so nasty is because a lot of people are capitulating the theory of an altcoin season. And the reason they're capitulating the theory of an altcoin season is because for the past 2 cycles, they've seen it occur. They started to get signs that it was going to occur in November, December. And now that entire hope of that occurring exactly the same as the last cycles has been evaporated. And that is intrinsically affecting people's belief in the altcoin market. But we've been discussing for a little bit now on the channel, and there has been obviously a lot of commentary about this on X as to how this altcoin cycle is different. You're going to see periods and pockets of altcoin outperformance. We're going to see certain sectors of relative strength, but the overall up-only altcoin market like 2021 and 2017 is not going to happen again. And for that reason, I think a lot of people have become disillusioned with the market, even though there are obviously still major opportunities during these rallies. So we might see this like another bounce, then sideways, and another bounce. During these rallies, when we do get them, like November, there are huge profit-making opportunities. So like I said in the last 2 videos that I've done, I think it's about recognizing whether we're in lights on and lights off mode. When we're in lights on mode and we're getting rallies, be in the strongest coins in the strongest sectors, capitalize fully during that time, make a lot of profit, shift it back into USDT and Bitcoin. Preserve capital during these downtrends, and then on new opportunities, go back into the market and capitalize for that next uptrend. We're going to speak about whether I think now is actually a good time to buy the dip on alts in preparation for the next uptrend. But the overall reason I wanted to show you this chart is to contextualize why the market is behaving like it is. It's not just tariffs and some of the news that we're getting, which is obviously affecting the market. The reason why altcoins are selling off more is because people are losing intrinsic belief in the altcoin market. And because of that, by nature of that, the markets can't behave the exact same way like they have in previous cycles. We'll get into my plans with altcoins slightly later in the video. So we are seeing obviously a major sell-off on alts off the back of that, and this is clearly being triggered. I don't think it's the root cause, because fundamentally alts have looked weak for about a month now, but this has been the latest dip, and this capitulation week has been triggered by a lot of the fears around Trump. And it's kind of ironic because the reason the markets ran up so hard was because of Trump and the optimism around Trump. But the exact same promises that Trump made that got him into office and got people really excited are now coming to bite us in the backside, because he is executing on one of these promises, which is basically protectionist policy and tariffs in the US. Basically, all you need to know about tariffs, and I'm not going to LARP like a lot of other people right now about tariffs, is they are essentially a tax. You're basically taxing goods being imported to the US from other countries. And this has some knock-on effects. We'll get into some of them now and why the market is negatively pricing this in ahead of time. I think one of the main things the market is worried about is the potential for economic weakness if these tariffs are implemented. Kabisi says that they expect US economic output to decline by an average of 2% per year through 2026 if these tariffs go ahead. The combination of a trade war and potential new chip bans could significantly weigh on tech stocks, so this is obviously affecting the Nasdaq and the S&P. The other major fear, of course, is how does this affect interest rates? Will this cause higher interest rates due to these new tariffs that are being implemented? What does that mean for the US dollar? These are all very valid questions, which are now resulting in a major sell-off across tech stocks and global markets. We saw Asian markets tumbling after the tariff trade war has started to escalate. Basically, after he said he wants to impose tariffs on Canada, Mexico, China, we've seen the US dollar rise. A lot of other currencies like the Canadian dollar actually go down against the US dollar. And this is obviously causing widespread panic. Now, if you want to read up a little bit more on tariffs, I really recommend pause the video now and read this, because this is a great piece that was posted by Jeff Park about why this could actually be bullish for markets and Bitcoin in the longer term. It's weak in the shorter term as Trump is using this as a negotiating tactic to get what he wants. However, if this is a negotiating tactic so Trump can achieve his goal, which is a multilateral agreement to weaken the dollar, then in the long term, this could lead to a lower dollar and lower yield, which is very good for Bitcoin. So we do have interesting dynamics right now, which all pretty much hinge on whether Trump actually goes through with a lot of what he's saying, whether it's just a negotiating tactic and we don't see some of these tariffs imposed, or whether we see some agreements actually come into place which achieve his goal, which, I mean, one can only logically assume that is to end up lowering the dollar and lower yield so markets actually perform strongly. But markets are having a knee-jerk reaction to this, and that's why we're seeing a sell-off. So I still think, even from a regulatory perspective with crypto, Trump being in office is a good thing for crypto and Bitcoin and markets, at least versus the other option. However, in the short term, it is causing a little bit of pain. And in that discrepancy, I do think creates opportunity. I like this tweet from Cousin Crypto. It pretty much summarizes things. Bidding when Trump wins because of the things he said he'd do, then selling because he's doing the things he said he'd do is so stupid. It kind of summarizes pretty much how markets are behaving right now. And look, in terms of the tariffs, I think every single week we're getting a headline. Like we've had DeepSeek, we've had FOMC, now we have tariffs. There's always something in the market. I think as long as the macro picture remains intact, and clearly these things make you question the macro picture, but as long as nothing drastically changes, and I think a lot of the fundamental reasons the Trump bid came into place, the strategic Bitcoin reserve, better crypto regulation, I mean, we obviously at some point are expecting quantitative easing to come back in, we're expecting rates to continue to go down. None of that really changes, but how the market is pricing in some of these events obviously means that the markets are volatile in the short term. Ultimately, markets just aren't really liking Trump's rashness at the moment. When he comes out and says something, they're reacting. When he acts on something, they're reacting. It's this early volatile period of him being in the office where the markets are really reactive. And I mean, especially for crypto and alts, which are like really risk-on assets versus the stock market, they sell off way more aggressively as the market's trying to de-risk. So you get these major volatility events. But we do know if you're a trader and an investor, volatility creates opportunity. You just need to be able to capitalize on that opportunity. And that's something we're going to discuss in today's video, how I am actually capitalizing. But look, don't let anyone tell you this doesn't suck, because if you're holding altcoins, it does suck. It hurts. A lot of my spot positions are performing really badly. But you have to remind yourself that this does create great opportunities. If you still believe at any point we're going to get an altcoin run, if you still believe at any point we are going to see further upside on Bitcoin, times of mass panic are actually great opportunities. And that's what we're going to dive into a bit more today. What are the best opportunities in the market right now? And how can you go about positioning your altcoin portfolios? I think today's one of the days where you just have to do everything possible to survive and not get shaken out, especially on an illiquid Sunday heading into a Monday US Open. Your goal today is not get shaken out, stay in the market, survive, because in crypto you need to survive to thrive. And unfortunately, a lot of people are going to get shaken out. A lot of people are going to leave the market. A lot of people have already left the market, and that's what creates opportunities for those who stayed. I stayed around in 2022 and 2023 when it wasn't popular and all the tourists had left the space. It hurt, but it was the most important thing for me to actually be around then, learn, and position myself for what eventually ended up being a really fruitful 2024 for myself. And if you've gone through a similar experience more recently and you're going through these feelings now, it's really important that you stick around, because you need to survive in order to thrive later down the track. Now, I think this cycle is intrinsically different to the past one in the sense that even if this is a technical bear market in terms of price, we're not in my opinion, in a 4-year cycle anymore, in the sense that it's 4 years of down for alts and then up and then down and then up, or, 2 years of bleed. I don't think that's going to be the case. I think, as I mentioned before, we're in these mini risk-on versus risk-off bubbles where if, in a week something comes out and changes, like let's say Trump reaches some trade agreements and everything's fine and the dollar goes down and stocks respond, like alts aggressively reprice higher, and then 2 weeks of good price action and all of a sudden the strongest narratives are back again and there's catalysts and everyone's bullish again. That is a very plausible scenario that could be triggered by a variety of things. He starts talking about a strategic Bitcoin reserve, Bitcoin pumps, sentiment comes back, altcoins run. Like this just changes based on the macro environment right now. It's not like other cycles where it's, okay, we're going to have a couple of years of bull, then we're going to have a couple of years of bear, and every 4 years things reset. It's going to be very, very, very different. So I think it's actually easier in a way, because instead of braving the storm through a couple of years of downtrend, you might only need to brave it for a couple of weeks, days, at the most months. But obviously it is tricky on the other hand, because unlike last cycle, there are many more altcoins now. So actually the assets you select to hold through that period and accumulate through that period are much more important than they've ever been. And that's something we've discussed on the last couple of shows, which if you haven't watched, I highly recommend you watch. In the last 2 days, especially yesterday, I go through a lot of my strategy in regards to how to actually trade altcoins in this period of the market, because the reality is you do need to be a lot stricter with how you enter coins, how you invalidate coins, because this isn't really a market that's rewarding holders. It really is a trader's market. Now, obviously, I've got a portfolio that I'm holding, and I accumulated some stuff we'll speak about today for that portfolio, but it really does favor those that really take some time to learn risk management techniques to enable them to capitalize on these risk-on periods when we do get them, and then protect capital during the risk-off periods like we are currently in at the moment. As Credible Crypto here says, I know what you're feeling. I've been through it 20 times since 2017. Veterans in the space will tell you the same. It's hard to stomach the first few times, especially if you're new to crypto. These days are really hard to stomach. I remember having sleepless nights back in 2021. I think it was like May when we had that huge correction. It felt like the world was over. But as he states here, if you've been here for any number of years, you've been knocked down repeatedly, get back up. You can only make it to the other side if you keep getting back up. And that's my main message for today. You just need to stay in the race. And even if it means after watching this video, you just buy some stuff and then log off for a few days and come back, if that's what you need to do to just relax and take some time off the space, if that's going to help you survive, do that. I mean, the number one thing you got to do right now is prioritize survival over the pursuit of making money, getting shaken out of the market. I think it's very important that you actually stay in the game, because at some point, and it could be very soon, things are going to turn and you're going to wish you actually stayed in the game. And I think a lot of you may even have felt that from 2023. Maybe you came back mid-2024 or March 2024 and you're probably wishing, damn, I should have been looking at this stuff last year when prices were in the gutter. So if you've experienced that feeling before, this is no different. So now I want to get into a section of the video called Buy the Dip. Should you be buying the dip? Is this a dip to buy? Could things get a lot worse? First thing I want to say is I don't have a crystal ball in the short term, but I just operate based on my system. And my system tells me that major fear and capitulation events are events to buy in the market. This has happened in 2024 during the capitulation events that we did get. I think it was either August or September. I made a huge Bitcoin buy at 53K during mass fear, maybe slightly earlier in Q3. May 2021, this was a big dip that if you bought, you would have done really, really well. There were also, FTX is a prime example. FTX was one of my biggest buy days ever for a lot of DeFi stuff, Ethereum stuff, Solana. I have public tweets out there of me buying Solana at $10 during that FTX cascade. Those are some of my best buys ever. Pretty much all of my best buys ever have been during these major capitulation events. Some of my worst buys ever have been when the market is pumping and really hot. So I know it sounds counterintuitive, but peak fear equals peak opportunity. And this is technically the biggest liquidation event of all time in crypto, with the caveat that it's notional based on the dollar amount that's liquidated, not percentage-wise. But nonetheless, it's still one of the biggest wipeouts we've seen. So if I'm not bidding today, I'm just going against my system completely. And you'll know in past weeks, especially if you're in the Discord, and I've spoken about it over the past couple of weeks, I haven't really been buying heavily recently, only positioning in a few specific things, like some AI agents here and there, rebalancing, that kind of stuff, because we haven't seen mass capitulation. And there is no worse price action in crypto to buy than slow bleed. There are really two times you want to buy. One, on the confirmation of an uptrend, and then get in on dips in that uptrend, and then you have invalidation. Or two, major liquidation events, because these are the highest risk reward. And in fact, if a lot of you actually bought alts or Bitcoin during the actual bottom of the liquidation, price was around here, a little bit higher when I woke up, when I started buying, and I spoke about that on Discord, you would have already done really well on some of these trades. You're already looking probably on the leverage stuff at 50 to 100% gains already in the last few hours, and on the spot stuff, 15 to 20% gains already in the last few hours. And longer term, those entries are probably going to hold you in good stead, at least on the spot side, because there's a very strong chance that that is the bottom for a lot of alts. And the psychology in the market's kind of funny, because I remember in November, everyone was asking me, should I buy crypto now? I was getting texts from a lot of normies, should I buy XRP? Should I buy Doge? Now it's absolute crickets. No one's asking me to buy. If anything, people are dunking because they know, oh, Mars is the crypto guy. Let's, send him a message. Oh, Mars, what about crypto? It's going down, right? Because they missed the run up, and now it's a great time for them to dunk. But this psychology is so skewed. Like, why does everyone want to buy at the peaks and no one wants to buy now? My friends aren't texting me now saying, oh, Mars, should I buy the dip? I'm out of crypto. Is this a good opportunity to buy in? No one's texting me that. They're either dunking on me, or they were texting me in November or December asking if they should buy crypto. So if you aren't actually in crypto, if you're all in stable coins, or if you're just someone that is just watching me for the first time now, if you are not in the space, this is a fantastic opportunity, in my opinion, to get those early positions. This is a much better zone to start building crypto positions, especially in promising narratives for this year. Utility, RWA, I think AI, agents, and AIs are on the precipice of something really special as well. These are the kind of sectors you can look at, because a lot of them have had major sell-offs despite the fundamentals actually being quite strong. So if you're not in crypto, this is a great opportunity to accumulate. If you are heavy in crypto, like I know a lot of my audience is, then I think it's less about being super aggressive and more about just surviving and making sure you're set up for the next few weeks and months in crypto, so you actually can survive even if we get more chop. And as I said before, if you just need to buy today and then step away from your screen, that could be an approach that you take. But I think capitulation selling at these levels is a bad idea. I'll get into later what to do. Now, I don't think a lot of you are in this camp, but some of you might be like, I'm not bullish on crypto anymore. It was all a scam. It was a lie. I'm not bullish on alts. I just want to get out. Should I get out? If you are one of those people, later in today's video, I will touch on this, because maybe some of you can't stomach this. And honestly, that's okay. I'm not going to be that guy to come here and be like, oh, you can't stomach it, you're weak. Like some of you genuinely are overinvested. You don't like volatility. You got families to look after. Like, I understand not everyone can just risk money willy-nilly. And some people, this game isn't for you. And if the game isn't for you, and you just want to go back to holding Bitcoin and Solana, that's fine. I'll tell you later on in today's video what I would actually do about exiting underwater positions that you don't believe in. I wouldn't be selling right now, but I'll give you an approach for that later today, because I think some of you, not all of you, I know a lot of you are just going to stay and probably really benefit from it, but some of you don't want to play the game anymore. And that's fine. I would urge you to keep educating yourself and keep learning, even if it doesn't mean investing. But if you genuinely don't think you can play the game, I'll go through a strategy that you can use to exit some of your positions, because I want to appeal to all sides of my audience, not just the crypto degens. All right, I want to read this tweet from Fragile, which gives some advice on buying the dip, and then I'll go into what I did in terms of buying the dip. He says, when we see liquidations of this magnitude, there are a couple of things that often happen. One, the classic V-shape reversal higher only really happens in a perp-driven cascade due to high funding rates in a structurally bullish trend. This isn't a structurally bullish trend, so I don't think we're getting a V-shaped reversal. Two, during major wipeouts like this, we typically see the main move down, then settle like 40% above wherever the bottom wick was, then a small bounce from shorts covering, then chop around for a while. Three, we then typically see a retest of that bottom wick from the initial cascade in the coming days. I say all that to say, take a deep breath. You don't need to throw everything in one big hero trade. You'll have plenty of time to buy this wipeout and capitulation. I would generally agree with this. I don't think it'll be V-shaped. The only reason it would be V-shaped is if Trump came out and like reversed everything tomorrow and the markets just rally. But I think the framework here of the market starting to consolidate a little bit, then some of the weak coins giving up those gains and going back down to their liquidation lows. I think that's generally the framework that we see. And I've experienced this on pretty much every liquidation cascade. In these conditions, you see a cascade, market bounces, it recovers, then things bleed out a little bit. Some stuff just goes to zero, the bad stuff, and then the good stuff ends up recovering from that over time. So I would be patient. If you didn't time the wick low this morning, it's okay. I think you can be patient, but I still think there are some good risk-reward buys today that I want to get into, generally speaking. And these buys might not necessarily be executed all today. You might have a plan over a few days, as Fajal points out, to accumulate. But I think this general vicinity for a lot of these coins will be a good vicinity to accumulate. But not every coin, as I said. You're going to see a lot of rubbish being wiped off the market right now. I mean, Rasmus says here, the fact no one knows which Solana coins to buy on chain is a really bad sign we're going lower. What he means by this is there aren't that many consensus plays, and because attention is still so fragmented in this market, a lot of coins aren't really destined for a very quick recovery, in my opinion. A lot of stuff is going to die out, and what you're going to see is basically this scenario where a lot of tokens just flush out because we've minted too many, go to zero, and then some tokens rise from the ashes. And the tokens that rise from the ashes will do better than ever because attention will be less fragmented because we're going to wipe out a bunch of stuff, and then these tokens actually have the proper setup to perform really well. I actually think this flush creates a lot of new opportunities, especially for people that, missed the original AI agent run or missed the AI run, later last year, or have missed opportunities on RWA, etc. By a lot of the stuff being flushed out of the market, the good stuff can really rise to the top. And that is the stuff, and I'm going to get into a list now, that I'm mainly focusing on. I think we did need the flush. I know it's difficult, but in a way, the flush was needed to pave the way for the next leg. Like, think about it. We had tens of thousands of alts pumping at once. Unless liquidity kept coming into the space, which it's not going to, unless there's like QE or some sort of stimulus like 2021, you actually need these wipeouts on altcoins for the good coins to actually recover and have the necessary amount of liquidity to pump. So a lot of the alts that I hold, I still have a lot of conviction in, and I actually think some of the bad stuff getting wiped out was good for some of these alts. Now, of course, I also have been holding some bad stuff, which either A, I've been forced to de-risk over the past couple of weeks, or B, I'm still holding on to a percentage of, and that's bleeding. For that stuff, I'm going to wait for some bounces, because I think we will see some dead cat-esque bounces on these coins, and use it to consolidate into the stronger assets. But I have been talking for a couple of weeks now about consolidating, but we'll go over that even more today and talk about some of these assets. So before we get into that, one more point I want to make is this. There are a lot of dislocations all over the place. What does dislocations mean? In a bullish market, I feel like markets are a bit more efficient. So tokens with strong catalysts, strong announcements, strong trends, the alpha tends to reflect in price. In a bearish market like we are in right now, alpha doesn't reflect in price. I'll give you a couple of examples. Jupiter is performing quite badly over the last couple of days, but if the market had remained bullish, that announcement was really fundamentally bullish, and I think personally price is dislocated on Jupiter. I think it should be higher, but since the market's so bad, it doesn't really care. People just need to exit stuff because they just need liquidity right now and they're panicking, or they're getting liquidated. Another asset is ONDO. ONDO has a big conference in 4 days. If the market was really bullish, I think it would keep ripping higher heading into this conference, but that's not what we're seeing, so there's a dislocation there. And the biggest dislocation of all, which I urge you to pay attention to, is in the agent space, because there are a lot of protocols with very strong fundamentals in terms of potential revenue and potential opportunity in the market. We'll get into a couple of them today, which are also massively down, despite fundamentally still having the ability to really change the fabric of the space and how we trade on chain. So there are a lot of dislocations. Dislocations can be as small as there's a major announcement coming in 2 weeks, but no one's talking about it because everyone's too worried about being bearish. So it's actually for trenches right now. If you are in the trenches, spotting these altcoin gems, looking into sectors like agents, this is a great market to actually look at picking some stuff up, because price is so dislocated from reality. This was really good alpha from OSF Rect, and it's something that beyond the list I'm about to show you now, I urge you to go and do more of. Look into a lot of these coins and look into the on-chain stuff, because there are a lot of opportunities which are going to arise out of this. So let's go through my buy list. Personally, this morning during that wick, and I didn't time the exact bottom. I had some limit orders set, which I always recommend. I got some orders filled, but when I woke up, I made some buys, and I posted about this 4 hours ago at the time of recording, probably 6 hours by the time you're watching this video, as they usually go out 1 to 2 hours later. I know the market's bounced a little, but I was able to get entries on some of these coins. Now, what I did is I posted my full list, but I'm not buying all of these coins because my personal situation is different to yours. For example, I didn't buy CHEX. Why? Because I already own enough of it. I'm happy with how I'm allocated. I don't need any more of. However, I have been buying more Jupiter, and I have been buying a little bit more Virtual because I was a bit more under-allocated to those assets relative to where I wanted them to be in my portfolio. So this list isn't to say you need to buy every coin, but it's just a guide to say I'm bullish on all of these coins. I think they could all be good DCAs based on what fits your portfolio. For example, you might be really heavy in RWA coins, but you might not hold any AI. You might have missed the latest agent run or been in the wrong coins. Now you have a position, an opportunity to fix that. Maybe add some Virtual if you missed that. Add some ANON if you want upside to DeFi AI and AI agent abstraction. Add some LMT if you want upside to a potential AI agent play. Add some Solana if you've been underexposed to Sol versus Ethereum. Add some Hype if you want an asset that's been exhibiting relative strength. Like, you add what you need. Like, I bought Hype at $8. I've also been DCAing as price has gone up. I'm comfortable in my bag, so I didn't buy that much of it. Whereas other bags I went heavier on. So this list, I'll go through every coin now and kind of give my quick thesis on it and look at some charts where applicable. But remember, I'm not buying everything today because this is a very big list and you probably are only going to pick 2 or 3 that you focus on. I think right now, 5 to 10 coins in your core portfolio makes sense. And then for the rest of it, you can just trade. And there are lots of coins here which I think are valid DCAs that could come back, but I'm just personally not playing them because I can't focus on 20 coins in the market. I'm just focusing on very specific sectors right now. But if we do get a recovery, pretty much every quality altcoin is going to go up, and not every quality altcoin is here because quality is subjective. There are coins like AI16Z and AIXBT, which I actively trade, but they aren't on this list because I didn't think they fit into my portfolio at this time, and I would rather trade them based on technicals, but for you, they might be valid DCAs. Now, looking at some of the coins. Solana, I think Solana looks fantastic. It's still on the weekly moving average. I think as a major, DCAing Solana, I think, is still not a bad idea, and at least you have invalidation that's pretty clear under that level. Hyperliquid, this is a coin that if we get any further downside on any dip, I'm pretty much accumulating on Hype. I'm very bullish on the Hype thesis, and I think every single time the market drops, it keeps exhibiting why it's so strong. Like this, when I woke up this morning, I took this screenshot. Pretty much every coin was down 20%. Hyperliquid was up. That is the definition of relative strength. Hype and Sol both look like absolutely nothing has happened to their chart. Now getting into some of the utility stuff. Chainlink, I think, has a very strong narrative right now with World Liberty Finance, Trump's projects actually buying and holding Chainlink. It's also an RWA. It's also got the USA narrative. It's also got the institutionalization narrative. It's not going to 10x this cycle, but as a safe core portfolio hold alongside Solana and Hype, I want to hold some Chainlink. Now, some of the other assets that are more speculative out of the majors, there are 2 in particular that if you want to take on a bit more risk today, and you don't have to, you can look at. One of them is Phantom, or S. This has had a spectacularly bad launch, but because of that, has had a spectacularly big decline, which in my opinion is starting to now represent more opportunity as we go down towards this high time frame level. I still think the tech on Phantom is really good. I still think there are good products on the network, and at some point, I think this will come back and perform. So for that reason, that's something that I looked at adding this morning. I didn't actually buy Phantom because I already had a position, but this is something that I was looking at and I wanted to present today. As I said, not everything I bought. Same as PEPE. Like, I didn't actually buy PEPE this morning, but I do still hold a bag of PEPE, and I've actually considered adding more. It's just I'm pretty happy with my exposure to the market. I'm trying to be a bit more defensive. I'm trying to not add too much stuff right now, but I think at some point PEPE comes back as a leading meme. Now, I think a lot of memes are now going to go to zero, but I think there is a few that will eventually come back. I think they're just going to be slower movers than other sectors. And I've been saying this for a couple of months. I think AI, RWA, utility. These sectors have a stronger chance of bouncing in the short term. Memes will take longer, but some of them will end up coming back when conditions improve and people decide to be speculative again and degen. But I think it's mostly the centralized exchange memes because the Solana trenches are a little bit cooked right now that are worth focusing on, and that's why I picked PEPE for today's video. And then another utility coin that I think is a decent DCA is Athena because of how correlated it is to ETH and funding rates. When Ethereum does bad, ENA acts as a beta, it goes down a lot. It also does pretty badly in negative funding environments. There are a lot of shorts right now, and it's a reflexive asset, so people are front running this. So it's going to do bad during bad times, but it does really well during good times and pumps really hard. So I do want exposure to that. And yes, that means it becomes risky because if this is the beginning of a big bear market, then Athena is going to keep bleeding, right? But I wouldn't be buying anything if I thought it was the beginning of a big bear market. I'm buying because I'm opportunistic on a period in crypto where there is a lot of fear. So ENA makes the list. Move is another one that I think is dislocated. There's a few coins, as I mentioned, Jupiter, ANON, which I'll mention later, and ONDO. But Move, I think, is another one of these coins that if the market had never dipped, it wouldn't just be at 80. It probably would have been $1 to 150 because they just announced their mainnet. They just had Trump's project, World Liberty Finance, buying Move. It became a Trump coin. All those coins have been really good in terms of relative strength lately. For example, Link, as I showed before, and ONDO. This was going to be in that category. It had just broken a clear level on the higher time frame, the money noodle, and then it ended up rejecting because the whole market tanked and it couldn't maintain steam. Everything sold off. But this is another one that I accumulated a bit more of because I think this dislocation, if the market ends up recovering, will end up going back to being a little bit more correlated to reality, and that should result in positive price action, at least in the shorter term as assets start to reprice when they do. So Move is one that I also added for that reason and fits that dislocated category in my opinion versus price and fundamentals. Now let's move on to the AI coins. I just want to say, if you are trenching, AI is the top sector to be trenching in right now. The meme meta is a bit cooked, but the AI meta, since a lot of the agents have been flushed out, some of the leading protocols are now really attractive DCAs in my opinion. So you've obviously got some majors like Virtual and Fartcoin. These are both coins that I DCA'd this morning. AI16Z and AIXBT, I actually don't mind as DCAs. I've just personally been trading them a little bit more, but they are down 49% on the week. So if your definition of buying the blood is ticked, then these could definitely be coins that you could consider adding. What am I saying? Been a long morning and a long night, guys. These are coins you could consider adding to your portfolio. Griffane, I never had a position in. I also said that at the time. Never really had a position in ARK, ACT, beyond just trades. Phi, I have a position in. This was one that I DCA'd and I think is quite good. And ANON as well is one that I think is actually exhibiting a lot of relative strength, and for this next period in the market is a relatively good AI agent play. I'm not looking right now at a lot of the riskier stuff. I'm not going down the risk curve with my portfolio that much at all, because I think when the market bounces from big dips like this, the leaders and the coins with the strongest narratives, they emerge to the top and they will bounce the strongest, and then the weak stuff will bleed out. So a lot, as I mentioned before, a lot of fluff is now going to go to zero, and then the quality will float to the top. But I still think there are some assets here, which I just mentioned, like Virtual and ANON and FAI, that are still quality. And for that reason, I think they're probably better bids right now than some of the more speculative agent stuff, which may very well bounce, but might not bounce as quickly. ANON is quite unique because it's actually one of the only tokens that's green on the day. Like, it's literally up today and it's held support. I know it's come down a lot off the highs, but it also launched at $1. It ran up from $1 to $24, and now it's consolidating again. So it makes sense why the sell-off's been so big, because of the time it launched at during the AI agent bubble. But I don't think it's part of the bubble, in the sense that, as I mentioned on yesterday's video, when new tech comes out, you see this instant bubble-esque price rally, which is fueled off speculation. Then when that bubble pops, what happens is you go through this consolidation phase of people realizing what the true projects are in that narrative that are going to stick around. And then those end up gradually rising and performing really well again. And then a lot of stuff dies out. And I think ANON for me, and I might not be right on every coin. Some of these AI coins might not end up having staying power. But I think this has fundamentals that give it strong potential to have staying power. And for that reason, I think this one is a good DCA in the current market. And I've been talking a lot to Danny, advising him on strategy. And I think some of the stuff they've got cooking, for example, their beta launches this Friday, is really going to shake up how people trade on chain. And say what you want about his previous projects, but they went to multi-billions, right? At one point last cycle. The guy knows how to make a successful project, and it's these type of visionaries I like backing in the market because he has big, bold ideas. And I like big, bold ideas because if they pay off, there's asymmetrical upside. No idea in crypto is guaranteed to pay off, but I'm looking for plays with asymmetrical upside, meaning the potential of something paying off is much bigger than the potential losses or the risk of that trade. Going through some other coins, which I think will do well. Tau, I think, will lead the next AI run in terms of the majors, and this bounce was really encouraging from a relative strength perspective. So that was a very logical one for me to add this morning. There are a few more as well, which I've mentioned. LMT, FAI, WorldCoin is another major. I didn't add, but it's one to consider. And then finally, RWA really wasn't shaken by this dip much at all. Like, ONDO had a major wick, but it pretty much instantly got rebitted. I actually managed to catch, not the bottom here, but maybe around $1 today, which I'm happy because I've been out of ONDO for a while, but I managed to get back in on a trade ahead of their conference. I think short to midterm, this can do well. Long term, it's going to drown in unlocks, in my opinion. But short to midterm, I don't think the market cares. And it is one of these like BlackRock RWA proxies. So as a trade, I got back into that this morning. CHEX looks ridiculous from a relative strength perspective. Bounced off the money noodle, bounced off support, whilst everything else was nuking to the downside. Coins like CHEX and ONDO and Mantra have recovered really well and still look strong. This is a very strong indicator. Hyperliquid as well, Jupiter, Solana, ANON over the last 24 hours. I'm not just giving you guys a bunch of random alts. A lot of the reasons why these alts are on my accumulation list right now is because of relative strength. And a lot of these coins did not care about the dip. So what do you think happens when the market recovers? If in a few weeks the market is materially higher from today, do you think that the really weak coins perform, or do you think that the RWA assets, the utility coins, the coins that are showing strength in the face of a dip perform? Well, I'm going to go with the latter category because that's what's happened a lot in the past in crypto. When you get strong relative strength performers, these typically lead on the next uptrend. And this strategy of relative strength has worked for me. Obviously, the other component is identifying when something loses relative strength. And for that, you need to pay attention to the signs in the market. But that is for later on in a trade. At this point in a trade, you're looking at relative strength. And just to reiterate, I bought on the wick this morning. If you're just waking up now and you didn't buy anything, I don't think it's too late to average in now at all. Get that initial 30% in. But I do think you want to be a little bit patient. As Fajal said, you can get more shockwaves on Monday, Tuesday. The market can consolidate for a few days, and then some can give up their gains and give you another entry. So I don't think there's a rush to ape. But my rule is to buy when there's blood on the streets. And this was the definition of blood on the street. So I would be breaking my system if I didn't go in today. And I'll transparently tell you, this was the biggest buy day that I've personally had in terms of capital back into the market since my Bitcoin buys at 53K. So for me, this was a materially significant stablecoin deployment, at least 10% of my stable balance. And I am saving some for maybe in a couple days if those lows are revisited. But today I bought blood on the streets, and that is my strategy. And let's check back in a few weeks and see how these buys ended up going. And we can reflect on them about what went wrong or what went right. But that's my rule. That's what I did today. And I think long term, the strategy of buying major fear and selling major greed is always a strategy that's going to hold you in good stead in crypto, instead of doing the opposite, which a lot of people are doing right now. I'll see you in the next video. Hopefully you got some guidance or value from today's video. I'll probably see you tomorrow for probably another major update after US opens and Trump comes out and we see a bunch more headlines that probably affect the market, and we'll keep reassessing this day by day. So I'll see you tomorrow. Have a lovely rest of your day. Peace out.